Hello, financial fans. I did not buy or sell any stocks this past week, so no changes to my portfolio. I think it went down a little bit this past week, but I'm not actually certain. I didn't pay that close of attention to it. It's about where it was the week before. And I have four stocks I've picked out to look at, stocks to consider for the future. We know that the president made some statements about wanting to increase taxes on capital gains, and I think what that will all boil down to is that it probably will make more sense to think of long-term capital gains as your goal as opposed to short-term capital gains. They will probably raise taxes quite a bit on short-term capital gains, but I do not know. The president does not advise me of anything, and the reason he doesn't is because I'm not a financial advisor and I will not tell you what to buy or sell. But some of these stocks look very interesting. I have four stocks we will be looking at, and they're very diverse, and I think you will like each one of them as a stock to put on your list of stocks to consider, stocks to watch, and look at the numbers and see if they indicate something in the future. We're going to begin with the big one, Amazon. AMZN is the symbol for Amazon. Amazon, the world's biggest retailer. Will it continue to be a gigantic retailer after COVID goes away? Probably. And Amazon is huge, of course, and we'll take a look at the numbers here. $3,340.88 is the closing price, and it even went up after hours to $33.41.01 per share, and the closing price being Friday, and this is, I guess, April 22nd. The 52-week range for Amazon, that's first column, 2/3 of the way down on the left, and the 52-week range, $2,256 to $3,552. It's quite a range, and I do own Amazon stock. I bought some Amazon stock on February 29th of 2020, and it was $1,866 at that time, so it's almost doubled since then. And I bought more Amazon stock on April 6th of 2020, so over a year ago on both of these. And on April 6th, 2020, I paid $1,980 per share. So we can see it is going up. It knows only one direction, and that is up. The average volume, the first column almost all the way to the bottom, the average volume, 3,460,000 shares trade every day, and look down at the bottom of that column, it says it's near fair value, and it is definitely appearing to be on its way up even higher. Middle column, third item down, PE ratio 79, almost 80, and that is 4 times what I would usually think of investing into a stock, but this is Amazon, and the PE ratio is not quite as critical as it would be if it were some small startup company. At the bottom of the middle column, the 1-year target estimate, 3,988, make it $4,000 a share is what they're expecting. So this looks good as a buy and hold, and I would recommend any of the stocks in the future that you buy and hold if it makes sense. Maybe buy and hold them for a year or longer, but just wait and see what happens with the President, Congress, and whoever else gets in on the act. They can make things better or do what they decide to do. Next stock, Kellogg's. Kellogg Company, breakfast cereals. K is the symbol. And we look first column, 2/3 of the way down, 52-week range, $56.61 to $72.88. So it was up much higher than its current price of $63.28. Although in after hours it went down to $63.03 per share. And this is Kellogg's. They sell breakfast cereal, and it's not likely that people who eat breakfast cereal are going to suddenly change their eating habits because of any taxes on capital gains. So Kellogg's is just a dependable company that is there year after year. We'll look at the average volume, the bottom of the first column on the left. Average volume, 3,346,596 shares trade on an average day. And the stock experts say that this stock is overvalued. I do not agree. Third item down in the middle column, PE ratio. For a big company like Kellogg, 17.43 is not bad at all. It's probably lower than the average of the S&P 500, I would guess. The forward dividend and yield, 3.61. That's a very good yield to get while you're holding on to a stock, so you'd be getting dividends payment, and you get it without having to sell the underlying stock. Just keep holding on to the stock and you'll get that $2.31, which right now is 3.61%. 1 year target estimate, $65.06. That's up slightly, but it is up. And Kellogg's looks pretty interesting right about now. Next stock, NIO, N-I-O. This is one of the high flyer stocks. I do own NIO. I bought it for $51.29 on January 4th of 21. NIO is electric car manufacturer, and they've got some pretty good news from time to time. $41.08 a share, and the 52-week range, $2.91 to $66.99. That would be the same upside down or right side up. And at the bottom of that first column on the left says they consider this to be overvalued. And again, I do not consider this to be overvalued. The average volume, 94 million shares trade every day. P ratio not applicable because they don't have earnings. They're losing 73 cents per share right now. But that might be something to watch carefully. Just watch NIO every day and see what happens and see the news. It's a very interesting stock to follow. 1 year target estimate, $55.15. I think it will be north of that, but I have been wrong on rare occasions. And NIO is part of the EV, electric vehicle companies that seems to have quite a future if things pan out as what might be predicted right now. Next stock, the Southern Company, SO is the symbol, $65.33, the closing price on Friday per share. And the 52-week range, $50.40 to $66.40, or $66.40. The average volume, about 4 million shares trade every day, and the stock experts consider this one to be overvalued, and again, I do not. Third item down, middle column, PE ratio 22.3, which is okay for what this stock offers. This is an energy company, the Southern Company. The forward dividend and yield, a little over 4% yield you get for holding on to the stock, $2.64. And the 1 year target estimate, they say $66.45, just barely above where it is now. I think with the dividend considered and the potential for upward price on stocks that are in the energy field makes this something worth watching, something to consider. And I thank you very much for watching.